I know Sai been telling about all the success I'm having, right? Before we get into some of the things that we have been successful lately. First thing, we all as investors need to understand the risk, right? Every time we invest into stock market, or as a matter of fact, anything we invest, there is risk involved, right? Um, so again, the risk is sometimes tied to the reward as well. More risk you take, you might be rewarded more, or you might lose everything, right? So my experience, so I've been trading close to 20 years now. So I've been even like at market maker, interactive brokers, working actually developing some of the software for the middle office. So I have a lot of exposure to financial markets. And I've been trading, stocks, options, futures, future options, sometimes treasuries, bonds, sometimes, and FX, options on futures, and even within the futures, I've traded oil, gold, pretty much you name it, like S&P futures. A lot of them have kind of touched a lot of instruments. So over the last 20 years, I have made money, I have lost money, right? And I used to be very active doing the trading all that time, coming with a lot of ideas every time. And sometimes things worked and I made more money, and I lost more than I made. So lately, last few years, I kind of stepped back and starting to understand, okay, it's all tied to your rewards, are all tied to your risk you are taking, as well as how much risk management you have, right? Um, so lately, I've been kind of sticking to a few things that have worked for me. Um, so my take from all my experience is pretty much whatever you do, just understand the risk. That every time you trade, what am I going to lose and what I'm going to make, right? Am I okay to take this risk? So having said that, what are the kinds of trades I'm doing lately? So as I said, last 2 3 years, mostly I'm doing cash covered puts. I don't know if everybody understand what the cash covered puts are. So it's pretty much, rather than buying the stock at the current marketplace, what is the current market price, you just sell the put option, say $5 away from the current price, right? And if it gets assigned, you have to have a cash to take that stock and get the stock, and then immediately I write covered calls on those, right? So these ideas are mostly trading ideas. These are not the investment ideas, because I'm not going to hold that stock for a long time, at least in the current situations. So what are the positives and negatives of the cash covered puts? Of course, the cash covered puts, you need to have a lot of capital depending on how many options that you're writing, right? So for example, if you're writing Google, which is trading close to $90 now, right? One option, so you need to pretty much have to have close to $9,000 in your account, right? Because just in case it gets assigned. Of course, if you have margin, that's a different story, margin enabled. And also, I have enabled for all our accounts portfolio margin. So if you have more than 100K in your account, you can actually get the portfolio margin enabled. That means you usually get 6 times the margin, right? But again, be careful. So if there is margin, we used to tend to just use up all the margin, right? And there's of course, if we use up all the margin, there is a risk of things going down. Now think about it. If you're leveraging 2 times, if the things go down, you are pretty much losing the money at twice the pace as just investing your own money, right? So any questions on the cash covered puts, on cash covered calls?
Yeah, I know you guys cannot unmute yourself. If there is anything, you can raise the hand. We can unmute if that's needed.
So
I think no questions.
yes, other thing with regards to speculative options, I do speculative trades now and then, other than the cash covered puts and the covered calls. But my success rate has been less than 50% when it comes to speculative options, like just betting a stock that it's going to go up and buying a call option. That for some reason I don't have that much luck with that, so I'm losing more than I'm making. So I try to stay away from that pattern as much as possible. But again, sometimes you feel like, oh, there is an opportunity before us, we can take advantage of that based on other things that but I try to stay away from the speculative option trading as much as I can. So I know some of you guys, I do follow sometimes get into the Telegram group and look at some of the discussions. I know some of you guys are very advanced and doing some of the more advanced option strategies, which is good. I used to do those kind of strategies before, but lately I'm not. For various reasons, because the time is one thing where you need to spend a lot of time to watch and do those kind of trades. Okay, I hear some echo.
Yeah, sorry, yes, taken care.
Okay, so I see a couple of questions. Maybe let's go through how to pick cash covered puts. Okay. Okay, so let's look at, for example, let's look at the Google, for example. Um, so my current watch list includes actually Google, Amazon, because they have gone down quite a bit. I did do some cash covered options lately, and I came out. So last week after Google announced their, you guys can see my screen, right? Still, so I always look for market conditions. When the market is going up, of course, I'm not going to write um, cash covered puts, because that's the time for actually covered calls. If I don't have the stock in my account, I just wait out, right? I always look for opportunities to come rather than always trying to find, trying to do a trade. So that's why you see that when Sai is posting some of my trades, there you'll see large time gaps in between. That means I'm not trading all the time. So for example, Alphabet is trading at 96. So I actually sold cash covered puts when it went down to, I think it was close to like 87, 88. Because I'm more comfortable at that, even if I gets assigned, like I sold at 85, right? And I was more comfortable owning that because I feel Google is a good company. Even if I get assigned, even if it goes to 70, long term, it's going to go up. Why do I think so, right? So I like the statistics that Yahoo provides. I usually use this quite a bit. So I usually go to that stock and I go to the statistics. So you can pretty much see how their evaluation is going last few years. More than that, you can look at other important factors like what is the current PE and the trailing PE. So the PE ratio pretty much tells you how much, um, what's the current PE is pretty much, right? So usually tradition, it's been like 16 to 20 is very reasonable. And given that Google still has a lot of growth left, there is more upside to Google. Hopefully their Google Cloud and other things that are happening with Google, hopefully it will keep going up. So that's why, like when it went to 85, it was close to 16. So writing it for 85 seems more reasonable to me. So that's why I sold the puts. But at that time, I even had like stock, which I got it at 92 or so, something around that, 92 or 94. But then when it went to 96, I actually closed my puts as well as the stock. So now I think, given the market has gone up from 30 close, like from 3,600 to 30, almost close to 4,000 now within 4 or 5 weeks. I am expecting a little bit more volatility. Maybe it will go down, but again, I might be wrong. So I'm going to just wait for next opportunity. Like if it comes down to say 92, 93, I might start writing again the puts at 90 or 85. Okay. That's one question. Let's see.
So Hasti, I mean, like a general opinion from audience that we complete our presentation and then take up any question.
Okay.
Yeah.
Okay, so let's do that. Quickly, let me go back. I'll just quickly cover other things. So yeah, so covered calls. Yeah, pretty much the same thing. So if you guys look at the history with the inflation, right? Inflation is not something that will go away in 4 or 5 months, right? Last time it took in 70s, 80s, I think it was 80, it took almost 5 to 6 years, and the market was going up and down. So um, I know there is the speculation that given the interest rates are going so fast, that it will come down as also fast. But where we are earlier, based on the history, may not be that easy. So we expect, at least I expect, more volatility in the stock going forward. At least in the inflationary environments, it's actually a good approach to sell the covered calls. So if you guys already own some of these stocks, and you can actually even sell the leaps. So for example, if you're owning Google today, all right, for so trading at 90, or if you get it, like even if you buy it today for 95, so next June or July, sell it for like even sell the ones for $110. You collect some premium, right? So that way you are reducing the overall cost, and even if you lose it next year June, that's fine, because the next 6 7 months you're making close to 15%, right? On an annualized base, that's 30% return, right? So most of the strategies I look for 15 to 20% returns, but over time, like as you keep doing that every month, you might end up in a year of close to 40 to 50%, even if you lose some of the trades. So picking a stock, how do you pick stock? Yeah, so pretty much try to pick a stock that you are familiar with, or an industry you are in. So you know, right? Most of the stocks that I pick are the ones that I am kind of exposed to, like most of the technology stocks or a few other things that I've been following. So, and again, even the picking the stock, look at their financials, right? So when I say financial, yeah, your yahoo.com is a good place to look at. So look at what is the revenue and what is the revenue per share. Also check the what is their EBITDA is. All right, it kind of gives you the health of the company, whether they can sustain the current market fluctuations or not, what's the cash balance, all those. So some of the things that would definitely help you, because as I said, my technique has been try to own the companies or do the trading in those companies, just in case if you need to hold it for a long time, you can hold it, right? But sometimes you have to come out, take the loss. And it's easier to said than done. The reason being, I have been in the situation where you'll have a stock and you keep on holding it, thinking that it will go up after some time because you strongly believe in that company, right? Or sometimes we think that, okay, there is nothing can go wrong with this company. These guys have everything they need. They have a product. But believe me, there are factors that's outside of our control. So always think about the risk of how much you can lose, like even before you average the do the averaging, think about it. Do I do the average just buying the same stock, or should I buy a different stock, right? So it goes back to the risk you are willing to take, just putting more into a single stock. Okay. So that's what the picking stock, the trading ideas. It's again, we kind of covered out already. So try to pick the ones that you're more comfortable with doing the trading. And again, it's level of your level of knowledge, as well as how much time you have. Some of the advanced strategies. I know some of you guys, I see that trading quite a bit on a daily basis, right? Which requires a lot of time as well. So based on your expertise, your risk appetite, I would definitely consider what's the risk, right? At the end of the day, overall, am I making the money or not? Okay. So other thing, understanding the volatility. So I'm actually big fan of understanding the volatility and try to do around volatility. So if you go to Yahoo or anywhere, you can actually search for VIX volatility index. I think Yahoo one is better. Let me see. So when there is a lot of volatility in the market, so as you can see the spikes, right? Spikes means there is a lot of volatility, right? Year to date, whenever the market is falling, of course, there will be a lot of volatility. So you can even trade the volatility if you have future options enabled in your account. I do trade the future options sometimes with this volatility. When the volatility, for example, here, right, it's almost close to 35. It's very high volatility, right? So I usually at that time, I usually sell naked volatility options at say 45, meaning it won't cross the volatility index of 45, right? So I get some premium and I keep it. But those are truly speculative bets. But at least the volatility index bets I have done have worked 95% of the time, right? Because I only enter when I see a huge volatility spike and there is a panic in the market. But again, there is a risk involved there too. For example, if you have done something like this during the pandemic, you can see it went up to 660. It usually doesn't go above 60, right? So one thing you can get from this volatility index is like whenever there's a volatility is up, that means the stock prices are going down, right? So you can actually overlay SPY on this, and you can see how, for example, S&P index is doing here. So if you reduce 6 months, it will be much better. So you can see that when the volatility index is low, the S&P is at high, right? And when it is high, S&P is coming down, right? So if you look at like last 1 month, for example, it's kind of the same. That when it is going up, it's coming down, right? I think here it's not showing properly, but maybe let's do 3 or 6 months might be better. The graph wise, how they're doing. Yeah, so even in October, when it's high volatility index, right? You can see that the S&P is down, right? And lately volatility index is going down, so the market is going up. And if you observe the pattern here, year to date, it's kind of going up. You can see the spikes, and then it's spiking here, coming down. I think at least my speculation right now is it's going to go maybe a little bit down the volatility. That means the market might stay here at 4,000 for a week, or maybe it's time for again to go up next week. Who knows, right? So my strategy right now is I'm kind of in a holding pattern here. So when it spikes up again, I think I might start selling more puts, cash covered puts. Okay, so that's what I'm kind of looking at right now. So it's a good graph to look at what is the volatility index, and you can even put your stock, for example, if you're trying to trade Google or some other things, how it is trading with respect to volatility, the overall volatility. But again, individual stocks, sometimes it's hard because they have other corp events like earnings and other things going on, as well as some other geopolitical things based on what type of stock it is. It might not exactly follow the index pattern. Okay. Yeah, so that's pretty much it. I just want to cover. I know you guys, like most of you guys, are pretty based on the discussions that are happening in that channel. I see you guys are doing a lot of advanced strategies when it comes to options. So these are the basic ones that I have been using and been successful. So just want to go ahead and open it for discussion. We can, if anybody wants to talk about any particular topic, feel free.
Yeah, I think
Can we want to
personal.
open up? Yeah.
Yeah,
Or how do you want to do it? Do you want to go through the questions in the chat, or you just want to open it up for others to?
yeah. I think Sandeep raised a hand. We'll cover that. Then maybe we'll cover all the chat, and then any others who come in the line. Sandeep, you,
Yes,
uh,
thank you. Yeah, so first of all, I would like to appreciate you, Mr. Hasti. I don't know it's your first name or last name. I kind of missed it. I think Sriram was talking about you, and he was telling us how you helped them regain his portfolio. For that, I would like to congratulate. Looks like you're a kind-hearted person. And out of your topics, what I want to know or see is like the covered calls or a cash covered puts. If you could do a demo, I don't know if it is feasible or not. If you could do a small demo and show how that is done, that would be really helpful.
Okay, let me see. Then if which because I pretty much closed all my positions recently. I'm just trying to see. Let me see if I can log into my. Just to give me a second.
And actually, I've been doing this cash covered calls or puts, cash covered puts. But yeah, in general, like if everybody can see, I think that's what I found with these is they are really helpful tools actually to make some money in case of market
Right.
volatility.
Okay, so you guys can see my account, right? This is the account that Sai was mentioning, which kind of went up and down. Yeah, I pretty much closed all the positions on Friday because when the market went up too fast, I thought it's time for me to close so that I can wait for the next opportunity to come through. But anyway, so yeah, for example, if I want to do Google, so I have 76,000 in that account, as you guys can see, right? So here, if I want to look at, okay, so the Google is selling at 96. So I'm more comfortable owning Google, and say my comfort level is at 95, right? I'm okay owning at 95 or $90. So this particular I guess navigation is specific to Ameritrade, but whatever the broker you guys are using, everybody has kind of a similar interface where you can look at the option chain. So I usually just click on the option chain. Sometimes I do weeklies and sometimes monthly, depending on how much premium I'm going to get, right? So most of the time it's near money, or I usually just do all so that I can see the for all strike prices.
Okay.
So here, the first one is the November 18. So most of the popular stocks will have weekly expiration. So you can actually trade the weeklies now. So you can go here. So the current price is at 96. So if I sell the put, I'm going to get the premium of $1.38 at the current market, like at this strike price, right? At the money ones. So which I don't think I want to do that. So in this case, I might at least want to move away like $2 away from the current price just to say, okay, it is 72 cents. Is it worth? Maybe not. So I usually just go move on to the next one. So most of the time I'm doing it for at least 10 days away puts or monthlies, right? So here you can see at least a little bit more premium, like $1.85. So here, let's say in this case, I chose to $95 one, right? So I'll just click on the 95 so I can get the premium of 147. When you click that bid side, it will bid click, it's almost like a selling. At least in Ameritrade, it will automatically put the action as sell to open.
Okay.
Because think about this, here we are selling it, meaning we are collecting the premium ahead of time, right? So in the drop down, you can see sell to open, sell to close, meaning these two are credit transactions. That means your account is going to get credited, right? So buys are usually debit transactions, meaning you're actually paying to buy, right? In this case, we are selling it so that we are collecting the premium ahead of time. And we're saying, okay, I'm ready to buy the stock at the $95, right? And I look at bid and ask here. So you can see that bid is at 147, meaning somebody is ready to buy at 147 and somebody is saying, okay, they're ready to sell at 160, right? The spread is almost 13 cents here, right? So if I put 1.47, it's going to sell right away. That means I'm going to get $147, right? Because each contract is always hundreds, underlying is 100 stock. So I'm going to get 147, right? But I usually don't put the bid price. I usually select the somewhere close to middle. So in this case, it's like 154. You can even like sometimes you can pretty much see that from the last, based on that will be most of the night will be close to the middle, right? I usually put the middle or a little bit higher so that I know it's not much, $8 more than the previous, but why to lose that money on the other table, right? So then you choose number of contracts here. So here we are selling one contract, means we are saying I can buy 100 stock at 95. That means I need to have at least 9,500 in my account, right? But if you have portfolio margin enabled, you don't need to have all that money in your account. But at least if you're starting out and if you have the regular margin, depending on the margin requirements, it will also show you the impact. Let me see if I don't know if Amritrade actually shows that. So yeah, so put, for example, in this case, I have close to 76,000. I can even buy up to 5 in this case, right? I'm still like a 45K. So I can do the review order. So here you can see, okay, we're selling 5 contracts. It's a weekly at 155, right? So most of the time, just do the day trades, day in effect. That means at the end of the day, it gets canceled. And you can see that estimated trade amount is 775. This is the amount that's going to get deposited into my account. And this is the commission, right? After the commission, is how much I'm going to get, right? So I can click the place order, right? But anyway, it's after hours, so I can place and I can cancel it. I don't want it right now. So let's say once I have the stock in my account, right? Or I bought, like sometimes I do go long on a stock or it gets assigned after some time, right? I want to sell a call. It's the same thing that you go to whatever the stock that you want to do, and you go to the options chain. So this time, I wish they can remember the previous selection. So this time, this is on the call side because we are selling the call, meaning you already own the stock, and now you want to sell the call. So here, the same thing again, right? So you just do. So here you can see that the call price, you're actually getting a lot more, meaning you don't want to do the 95 one, right? Because you own the stock. So
Uh-huh.
that means you want to say that, oh, I want to sell it maybe for 99 or $100, at least $5 away from now, right?
Okay.
Or even like the scenario I was telling is like leaps, like if I look for long term, like meaning say sometime next year, say let's go for June, $110. So I'm getting $6 here, right?
Right.
I know we are kind of locking it right now, saying that okay, next year, June, I own the stock, I'm ready to sell at 110, right? Since I'm going to get a premium of $6, my effective price is $116. That's like $20 from the current price, right? So you're pretty much locking the sale price, meaning how much you're selling it for, and you need to hold that stock that long because you might get assigned, right? So you can go ahead and do the same thing here. Here also there is 20 cents. I usually just do in between and then so review the order, right? Here I'm just selling one, so I'm getting $610 commission, right? So if you think about it from the profit perspective, you are going to make like from 95 to 116, almost $21, right? So that way, it's close to 20% or 21 to 22% profit that you are making based on your current, assuming you got assigned at say 95 or you bought it at 95, right? It's like you're buying the stock and you're selling, saying that I'm going to sell it at 160 at a profit at a later time, right? But sometimes what happens is like if you sell this thing and then the stock goes to $85, okay? So which means the price of this option goes down, right? Goes to like $3 or $4. At the time, what I do is I usually just close that option, meaning I take the $300 profit and I close it and I wait for the next opportunity to come through to sell the covered call again. Because I still believe in the stock that eventually it's going to go up. Meaning, so you can actually keep generating revenue sometimes on some of these stocks like Google, Amazon. I know lately they got hit pretty bad. I'm sure they're good stocks to own based on what we know, right? And even similar trades you can do with SPY as well on the index itself. So sometimes these stocks can continue to generate the revenues. So you sell the weeklies or bi-weekly, right? 10 days away market, like the way the fluctuation is going, right? Like for example, on Monday, it goes to 98. I would, if I had stock, I would sell the call for at least maybe March once next year. But I'm not selling it for loss. I'm still making money, but I'm locking in my profit percentage. But given the current volatility conditions, there is a highly likely that the stock price might again hit $90, the Google stock, right? At that point, I can just close my option because I can buy that same option for a lower price and I close that and wait for the next opportunity again to make the money. Okay. Is that, does it make sense? Alrighty.
I think he muted. So
Okay.
I'll do one thing. I'll just open for everyone. If it gets clumsy, then I will lock it again.
Okay.
But he said he's good to. He got it. Makes sense, kind of thing. Yeah, this is open, guys. You guys can ask questions, and then we'll cover the chat questions too.
Hi
But
there,
let's be mindful.
this is Ritesh.
Thank you
I
very
have
much, Mr. Rasi.
Can you hear me okay?
Yeah, I can hear you, Ritesh.
All right, thanks. Yeah, so hey, thanks for sharing. I actually joined a little bit late, but I was there when you were sharing your selling put strategy. So can you talk about like
If you don't, 1 second, Ritesh. Sorry to interrupt. My apologies, guys.
No worries.
Whoever not speaking, I request everyone to be on mute and take turn in doing it. But as I said, if it gets clumsy, I'm going to turn off that option and we'll deal by raising hands. Yeah, go ahead, Ritesh.
No problem. Thanks. So yeah, I was asking like when you're selling a put, like 5 puts of Google, let's say, right? do you make sure that you have the money in the account in case you get assigned, or do you use margin for that? How do you how do you manage the trade? Because one challenge I've seen with options, and I do some of it, and but one challenge I've seen is that managing the position is the critical thing once you kind of place the trade, right? So can you talk about how
Yes.
you manage your position?
Yeah, I know some of you guys have seen some of the trades, right? I do trade like quantity wise, sometimes very high quantities, right? So which requires a lot of cash in there. So most of the time I try to keep account with a lot of buffer in there. It doesn't mean that I ended up having to manage that situation where suddenly things went wrong, right, in the wrong direction, the one that I wasn't like anticipating. So yeah, so in those cases, I did have to take sometimes losses, as well as a couple of times I had to pump in more money because I knew that things were going to turn around. So I always kind of calculate that ahead of time, like before I putting the trade in. Okay, just in case things go wrong or in the wrong direction temporarily, do I have the funds available that I can pump in, right, extra from external sources? Um, so yeah, so it has happened to me because again, there will be market situations because nobody can predict what's going to happen tomorrow, right? But at least I'll make sure I have funding lined up in one way or other, just in case things go wrong. But
Okay,
I
thank
would
you.
say 98% of the time, I was able to just manage whatever the funds that I have. And a couple of times, yeah, I did have to pump in. So the good example is during the COVID, when it was falling from almost like 33 or 3,400 to 2023, I was just writing put like crazy, right? Uh, yeah, I did have to pump in quite a bit of money. Luckily, things turned around so very quickly, so which was good thing. I even ended up getting into margin, and then a couple of other line of credits I had to pull in because I was very confident things will turn around. But you never know. I got lucky there, I have to say.
Right, right. And one more follow-up question, like in general, like for the trades that you share, right? Do you also recommend any stop losses for the option trades that you share? Like stop loss, trailing stop loss percentage wise, or any kind of range that we should put a stop loss on the option?
So I usually like don't put the stop loss orders ahead of time. As I said, it's mostly cash covered puts and the covered calls, right? So sometimes when the thing go really bad, um, I pretty much take the loss and come out. So meaning
So
earnings.
you're watching them basically. You're tracking it with the market like in real time.
Not the real time. The most of the time, it's some kind of event happens, right? Something comes out bad for that company. Suddenly things fall down, right? So then I usually just get an alert saying that, okay, portfolio is down or this stock is down by 10-15%. I have those alerts set, right? And then I see that, okay, yeah, things going wrong, and then I make the decision. So a couple of things I try to avoid is around the earnings times. So one thing that that didn't work for me, it might work for others, is speculating around the earnings times. There are a few times, like a couple of things I'm very confident that I do it, but most of the time I'm trying to avoid it. For example, writing this weekly or bi-weekly, or even the calls that are open around opening a new trades just close to the earnings time coming up. When I open the weeklies or bi-weeklies, you'll see that most of my trades actually close before the earnings come out.
Right.
So that way, at least lately, this last couple of quarters, you can see that things are wild. Like when the trade comes out, yeah, either it's a positive side or negative side, both are wild, but I have not been that lucky. So So I try to avoid that as much as I can.
Right. Yeah, that's a good point. I think it's like you place the trade like a week before earning, and then you exit right before the earning call, right?
Yeah,
And maybe let a couple of runners, or one runner for the earning if you have enough
yeah. So a couple
conviction
of
for the.
right. So a couple of other things I also look for is so related companies, right? Trades. So for example, so Microsoft, Amazon, they're all cloud-based companies, right? So if there are any other related companies that their earnings come out early or later, so based on the earnings of one company, I try to do a trade based on their results, thinking that it might do get good or bad, but I try to close the trade before the earnings come out as well. Meaning, because what happens is if same the company in the same sector is doing pretty well, meaning usually other companies also tend to go up or down, right, based on the other company's result, right? So I just try to take the advantage of that, but I don't wait till the earnings. Meaning just before the earnings, I just kind of come out.
So are you saying that like you place a trade in a parallel company after the earning comes out of for a similar company or
Yes,
before?
yeah, sometimes, yes, yeah.
Okay, gotcha. Thanks. Yeah, I'll let other people go as well. I have other questions, but I'll come back. Thanks.
Yeah.
Hasti, this is Ashwin here. I've been waiting for this demonstration from you from a long time. I hope you can hear me, right?
Yeah, I can hear you. Yeah.
Thanks so much, Hasti. Hasti, do you put any kind of a rule in place? At least you need to generate $5 margin or 5% margin before actually you sell your puts or calls?
So again, so I don't really look for 5% or anything. Yeah. So overall, I want to make money, right? That's my ultimate goal. But what I think is the money that I can own that stock. For example, Google is a good example, right? When I'm selling it, I'm pretty much saying, okay, I'm okay to own this stock at $95, even if it gets assigned, right? And if it gets assigned, if it's close to the same price, I immediately write the covered call as well.
Right.
So
So how
that
do,
way, yeah.
how do you decide that $95, right? That's my question.
What is it?
How do you decide that $95? Let's say $95, you're comfortable owning it, right?
Yes.
What what is that criteria that you use to decide 95 is a good time to own?
Just looking at their revenue, P, other factors.
Okay.
Yeah, given their P is right now close to 17, 18, it's pretty much, if you look at their earnings, right, it's close to already 20, even if it grows with a little bit more higher rate. So the chance to grow more is there, right? So for example, a Tesla, I'm okay to own at $150, right? So I'm going to wait. If it comes down another $20, I might write cash covered puts at 145, 150, right? But I'm not going to go too many into it, one or two, something like that, because if you look at their numbers, their earnings are going to be close to, in 1 or 2 years, $20 per year, right? Or at least, sorry, $10 per year, right? So even if you have a modest P of 10, 20, it's like almost close to $20, $200.
Got it. So the second question actually is how far in the timeline that you go? Let's say you are actually right now with November, for the getting the premium of recent premium.
Mhm.
Do you go at least a month or 2 months or 6 weeks and something like that actually, or you always have any strategy out there?
Yeah, so most of the time I'm doing near term, 1 week, 2 weeks, or like 3 weeks, 4 weeks, right? Within that range. Most of my puts are cash covered puts are, right? Only like when I'm doing the covered calls, then I'm actually selling far ahead, meaning sometimes I get assigned, say I sold Google and I got assigned, right? And it went to, say I got assigned at 95, it went down to 87 or something like that, right? So those times I don't want to sell right away. I kind of look for, okay, maybe next year, once if I sell, I get a little bit more premium, right? So those times I kind of try to sell the long term, the leaps, but otherwise it's mostly within a month.
Okay. Also, the last question I will give other chance. What time of the day that you typically execute these transactions? Because I see that the value of the option gets stable during after 8 o'clock. Do you do anything in the morning or 8 o'clock? I'm in the Pacific time zone, sorry. So that's why I say 8 o'clock.
Again, when I usually try to do it when there is a lot of movement, whenever that happens, right? When of course, when I'm watching the market. But most of the time, my executions are around 10 to 11. That's when I kind of all my morning meetings get over, or sometimes in the afternoons. But it's not that I'm kind of watching what I need to do at this time.
Got it.
But of course, I have CNBC going on in my room in the background all the time, most of the time. I'm kind of at least seeing some kind of, there is a lot of volatility, and if I'm not in a meeting at that time, I will definitely look at the selling, but I'm not kind of putting a particular time per se. But yeah, so sometimes I have seen, the things go up fast in the morning, and then the afternoon they kind of settle down, right? And I know a lot of people take advantage of that pattern as well.
Yeah, it is very, very sound and clear, Hasti garu. Thank you so much.
So this is regarding the covered call. Hi, Hasti. So when you write a covered call like for a week and so, and for example, you write a covered call for Google for 100 and price go to 110 or 115. So at that time, what you will do? You will just leave as it is, or you'll do some kind of thing.
You mean I already sold the covered call at current price, meaning for the 110 one, or?
Yeah, for example, Google, you sold the covered call for 100 and the price goes from 96 to 110 or 115. So on that time, what you will do?
I'll just leave it. Let it.
Leave it?
Yeah.
Okay, so just leave
I
it.
know. I know it kind of blocks your cash, but I don't want to take loss, right? Unless I really, really need it for other reasons, I would just leave it.
Just leave it and execute on the day whenever.
Yeah, let it go. Yeah, that's fine. Right. Because that's a decision I made. I know sometimes it feels, I've been in those situations where I lost a lot of times, and then stock kept going to almost like 30-40% above that level. Sometimes, it happens. I can't be chasing everything. So, yeah.
So you recommend do the weekly or monthly instead of like 6 months or 3 month leave covered calls?
Yeah, I usually more successful with the short term one. The long term ones, I do it when there is really, really an opportunity for me, right? So one scenario would be, I don't know, earlier trades I was doing, like when the market is hitting, at least during the May, June timeframe, right? When the market was at 3,600, S&P was 3,600. I was doing a lot of S&P puts at that time. So I was selling like 3,200, 3,400 for next year, right? So those I'm doing purely speculative, meaning that I know that I'm pretty confident that market is going to go up. Like even if I get S&P assigned at 3,200 or 3,400, I'm fine, right? Because eventually it will turn around. Even if I had to hold that for next 6 months for the 3,200, even if I lose, that's fine, right? So those, like if you look at those trades, I pretty much sold the almost like 8-9 months away, meaning I collected almost I would say like $4 to $5, right? Even if I get assigned, I'm getting assigned at close to 28 and 2,900, meaning I'm getting at S&P at that level, right? So those trade, you might have seen that those are almost like I was selling 30 to 40 contracts. I know it requires a lot of money in your account, but those are leaps, but we're scoring. And quickly things rebound, given the current environment, as you guys have seen, like it's wobbling between 3,600 and 4,000, right? So as soon as it went up 200, 250 points, I closed them.
Okay. And told us about the VIX. When it goes to like 35 to 40, it's time to do the sell put. So can we do VIX sell put?
Yeah, so VIX is a little different. You need to have, I think there are some indexes, but when I do the VIX, I do VIX future options. You can do that if you had enabled futures and future options in your account. So then you'll be able to do the VIX future options.
Okay. But just like a stock, we cannot buy VIX sell put, right?
You can, meaning you're just trading on the VIX index itself, yeah, in the futures, not the stock market. That it's I have not seen it. There might be some instrument out there. Maybe others might know, but for the VIX itself, I mostly do VIX future options. They're called FOPs, future options.
Okay. Okay, I'll look into that. Thank you.
So this is Ritesh. I had a question again. So I know that you and I think a few others share their trades. I was wondering if it is possible to also share when you actually share the trade, also share how many of them you're purchasing, so that we can also understand in terms of your strategy for exiting, because I see then you exit one and another, right, one by one. So is it possible to share that as well?
Yeah, it is possible. It's just that I need to remember. I know Sai has been, I don't know how religious he is posting my transactions. Maybe we'll take that as an action, Ritesh, going forward.
Yeah, that'll be great if that is possible. Obviously, everybody has to consider their own level of risk and make the trades like a fraction or whatever fraction they feel comfortable, right?
Right.
So typically, like, if you don't mind sharing, like, how many do you buy? Let's say you're buying an option that is like $3, right? So how many do you normally buy? And what is your strategy? I mean, because I've seen sometimes you exit it in two times, and sometimes you will exit it like maybe over 3-4 trades. So generally, what is your thought process at an average price of like $3-4 per option? I mean, like that becomes $400, right, per option.
Yeah, so a couple of things, right? So the first question you had was like, how many options do I go with, right? That's purely dependent on how much cash I have in my account, how much money left in my account to trade, right? Most of the time that dictates me how many options I trade, based on how much capital I already put to use. The second one, when do I exit? After how much profit? There is no particular rule I follow, but I just suddenly, like, if there is quick movement in the prices, then I try to just come out, take the profit, at least some of the profit, and come out. But I don't have a particular rule saying that I should come out like after a certain amount. But usually, if it moves quickly, fast, like for example, I opened today and I got the premium of $3, right? Suddenly things worked in my favor, and tomorrow it's I'm up by say $2. That means it came down to the option price came to $1. I might exit. That's fine. In $1, if I'm making, then it's well and good. I'm out, right? Sometimes I say, okay, let me at least take out what are the money that I can and leave the remaining. But those are decisions I just make on the fly, depending on other things I might do as far as the trades are concerned.
Gotcha. So you plan for about 3 to 4, exiting like 2 to 4 times, right? typically?
Yeah, so when I say exiting, yeah, so most of the options at least try to have some exits every week, meaning when I'm actually trading, meaning so you can see some months I don't even do anything because I'm busy with other things, and or I don't have cash available because it's fully utilized. Um, yeah, so at least 2 to 3 exits a week, something like that.
Okay. And actually, there is a few people that share their trades. So remind me, like, because some of them have their strategy where they exit same day, right? Most of the trades they exit same day. So your trades you are exiting in multiple days is what you're saying, right?
Yeah, so most of my trade I don't exit, meaning I don't really do it to exit the same day.
Okay.
Again, like most of the time I like trades, you see that they are expiring like with 100% premium collected, right?
Mhm.
Or I might get assigned, like rarely get assigned. Whenever I get assigned, I'm immediately writing covered calls. But again, like if my profit is quite high within couple of 2-3 days, then I'm exiting,
Okay.
just waiting for the next opportunity. Because if the things go in one direction pretty fast, like last 1 week or so, right? If I had um, cash covered puts last week opened before earlier, I would have closed everything last week. Because I pretty much in this account that you guys are seeing, pretty much I closed everything. I'm just sitting cash now because I
Okay.
think there will be opportunities coming next week. I am hoping, but I might be wrong. Who knows?
Okay. Thank you.
Yeah, I see somebody pointed that there is a VXY ETF for it's a leveraged. Yeah, so leveraged ETFs, just be careful. Depending, I don't know you that symbol that somebody posted. I don't know how many times that's leveraged. There are a lot of leveraged ETFs out there for various instruments, but just understand that leverage, how the leverage works. It's a 2 times. Okay. Any more questions?
Yeah, I think we have one in the chat. Just now he pinged.
Okay, what was the? Do you avoid CSPs or covered calls during earnings? What is CSP? CSPS meaning a cash secured puts. Yeah, it's SI, right? I try to avoid pretty much everything around earnings. Sometimes I've done it, but most of the time I try to avoid um, around that time. So if I already have a covered call that's going into the next month for that particular stock, I just leave it. I don't initiate any new trades on that stock that has earnings coming up in next week or so. Doesn't mean that I don't do those trades, but I try to avoid. But sometimes it's human nature that everything that things are going to work your way. But most of the time, I was wrong in those cases. I just try to avoid. Okay, so my question is, can you please share some ideas on how to recover? How to recover? It's a tough question. So I would have to say I got lucky in the sense. So I've been just doing, so this account that I was showing is the one that had the issues, right? So pretty much it went down to 40 and then I had to pretty much jump in to get it where it is now. So given the volatility lately, I'm just taking advantage of buying and selling. So just like as you see now, Currently, I don't have any accounts available any positions in there because I pretty much closed everything thinking market went too fast and I made the money, meaning I made some profit in this and I just came out all the positions. Now I'm going to again wait for start writing the cash covered puts whenever we start to see more volatility again. So right now my guess is that we'll have some more volatility, and mostly my current watch list is Amazon, Google, Doc N, which is the digital ocean, and a few other like Delta and few other stocks that I follow. So mostly I'll be trading those. So again, I'll be doing the similar trading, pretty much get in when the market goes down a little bit next time, and then hopefully I can, again, the market goes up, I close. But I think we are getting to the point where inflation might start stabilizing. We don't know when that's going to happen. I guess it's anybody's guess, but my speculation right now is maybe starting January, February or so, things might start turning around. It doesn't mean that the market is going to go crazily to 5,000, but at least hopefully it should come down to 4,100, 200 in that range. So rather than bouncing between 3,800 and 4,100 like now, or even 36 to 4,100 now, hopefully it will start be in 4,000 to 4,300 range starting early next year, or it might start happening sooner too. So a few other things I'm watching is so if you guys actually look at the historical inflation rates. Let's see. I think this one might be okay. So here, so you can see that in 2021, it kind of started off with the 1.4, right? It really started kicking in sometime in so May, June. So it went up and a little down and then started going up, right? So the inflation is always kind of compared to the previous year most of the time. I know even the guesstimates are based on that. So if you look at these numbers, these are high kind of starting from say, November and then went down, right? So if you look at comparing, so when you're comparing this months, right, they're going to compare mostly with the previous one, right? I know even the guesstimates are like that. So that way, when they're comparing to the previous ones, starting next year, you're comparing with the number that are kind of high, right? Hope, given that interest rates are going up, my hope is things will be much closer to what the estimates are, rather than the runaway thing that happened here. So again, this is my speculation. So I'm hoping the market will start at least stabilize between in a higher range. So I might start going little long in my positions sometime between now and end of year. Thinking next year there will the range bound is going to be a little higher, so that I can start selling more covered calls when that time arrives. So I might not do too many cash covered puts in next 1-2 months. I might do if the things really come down, and so that I can going long, but I won't sell the covered calls right away. I might wait till early next year. So that's my strategy right now. But again, it's up to you guys, because that's my theory.
So, this is Ritesh. I had a question. Like, I had sold some covered calls on my long holdings, and last 2 days, obviously, I mean, earlier it was deep in, like out of the money covered calls, but the last couple of days when the stock went up, it became in the money, quite a bit in the money because it was a very huge spike, right?
Right.
So now, my stocks will be assigned next month expiry, December. Most likely I'll have to sell them because most likely December it might still stay in the money.
Mhm.
Is there any suggestions on how that can be handled? Like, because I mean, should I buy more stocks for the stocks getting assigned, or what? How can I handle that position that is getting assigned? Because it might keep going up, right? Like you are also expecting.
Yeah. So that's a tough call, right? Yeah. So,
Mhm.
but hopefully you saw your calls are at a higher price than your cost basis, so you're still making money fully. Um, yeah. So yeah, there's no easy answer for that. So if you really think it's going to keep going up, then yeah, you can go long, or you can pretty much think that and then do it another way where whatever the money you made, right, you can spend that to buy the calls a little bit at a higher price. Meaning, so if you
Mhm.
sold the $100 calls, maybe you can buy $104 calls, right? But again, it's a speculative thing saying that it will continue to go up, right?
Right.
Or that at least is reducing your how much capital you need. So yeah, there's no easy
Right.
answer,
Right.
unfortunately. Or I would see, like, in the next this today and the expiry date in December, there is an opportunity that comes, the market goes down, right? I'm sure there will be volatility between now and December,
Mhm.
given the things that are happening with inflation or geopolitical reasons. Hopefully, maybe it will give you an opportunity to just close that without losing money on that.
Right. Okay. Thank you. Yeah.
Okay. Um, all right. So, any more questions? So somebody has a question, any chart ideas? Again, I don't look at the charts really, and I used to do like some of the shoulder patterns, few other things, but not anymore. I'm mostly looking at the ones that I want to own, and just based on their cash flow, uh, look at the statistics and see what the EBIT data is and PE is, and based on if what's my risk appetite is for this particular company, whether I can own it. And the other thing I'm pretty much lately doing is, like, so most of the companies has a good run with the post COVID, like last year, right? So I'm kind of looking at, okay, before COVID, where are these companies? So for example, so if I'm looking at Google, or even yeah, let's look at Google, right? So you can see, so before COVID, right, you can pretty much see here what the high is around $76, right? So last year, yeah, it went up to, yeah, $150. It's crazy. So yeah, the price wise, so is it close to what was the price before COVID? And yeah, again, you just need to look at what is the revenue, right? Pre-COVID, what was the revenue, how much it grew. At least looking at the last 2 quarters, it's most realistic now. So just look for those factors and see what the current price makes sense. So for me, at least, yeah, before COVID was 76. I know they had growth like cloud business and few other businesses. So it's reasonable for me, say, yeah, even 95 or even 90, like even close to 100 seems too okay, right? But yeah, 140 is too high. So those are the things I look for, some of the companies in which uh, I'll be doing the cash covered puts. So do you sell puts on the red day and sell calls? Yep, that's exactly most of the time. I'm selling the puts on the red day and selling the calls on the green days. Yep. Yeah, so last week is a terrific week to sell the covered call puts if we have our positions. Yeah. All right. Any more questions? And if we covered all the questions, okay, so just to set this perspective, how much accounts started with and down, and how much it recovered to, how long it took. Okay, yeah. So this question, like Sai pointed out, so this one had 100K the account when we started. So it came down to close to 40K. So now we recovered to 76K. So yeah, technically we are still at loss in that account. So yeah, most of the stock that initially traded were micro caps, and as you guys know, that got crushed quite a bit. So now we are sticking to the more established companies with strong fundamentals. Sorry, your trade posted in the groups if by I know Sai is trading some of Sai is posting Sai Ramero, he's posting some of my trades, but I don't think he's posting all the trades. As mentioned earlier, I'll ask him to post the trades going forward. Hopefully, sometimes we do the trades quickly and we might forget, but we'll try to make an attempt to post.
Yeah, I'll take the responsibility.
But again, as I said, it's individual risk that needs to be taken into account before you do any trades. So we might be doing it for various reasons, which may not be same for you as well. So when to cash, slowing by selling when it made sense, or liquidated and to get new perspective. So I'm not sure if I understand that question, RK. So at least if you're asking the question why I liquidated all the accounts and the thing in my account, yeah, because market has a good run. So before last week, the account was at 70K. It went up to 76K, and I could have done the covered calls, but I didn't. Only little bit of, like, not 100% of the cash was put to use at the time. And also I need to kind of think through for the next couple of months how we have to strategize. So that's why I completely turned it into cash. I don't know if that answered your question. I'm not sure about the question. Hopefully that answered your question. Right. So any more questions? Danu, is it open for everyone, or?
Yeah, it is open. Hasti.
Okay, I think we are good, Hasti. Thank you so much for your time. If there are any further questions, maybe, we can take up in the future sessions.
All right, yeah, thank you for attending. Hopefully it's helpful. Good luck with all the trades. Hopefully we'll all be sharing more success stories soon. Yeah, thank you all. Bye.
Thank you, Hasti. Thank you.
Yeah, thank you, Hasti. Thank you, everyone.